If you're a new CEO and you're seeking investment from a private equity company, I think the first thing that you need to do is to put together a good business plan. That business plan, it is critical, must be cautiously optimistic. Do not over-egg the financials of that business or the growth rates that you foresee in that business. Equally, it's important that you're able to demonstrate that you've thought about the scenarios in the case of the plan not going as expected, downside scenarios, and that you've also thought about upside scenarios where sales go better than you anticipate and potentially you've got more growth and you may need more capital to execute on that growth. But having both of those scenarios is essential for the confidence that you will get from investors when you seek money. Equally, when you have got that investment, it is really critical that you deliver on the first year's numbers. The second thing I would say about being a first-time CEO, be clear about your management team and be clear about the accountability of your executives in delivering that management team. You will have put together an investment case. There will be clear responsibilities in that investment case for sales, for operations, for finance, etc. And it's very critical that each of the management team understands their accountability within that plan and their reporting capability or requirements within that plan back to the board, and that they should also understand the accountability of the people that work for them within their team and their ability to deliver the numbers or the operational requirements or the financial requirements within that department to make this business successful. The third thing I would say is that as the CEO, it is critical that you maintain first-class communications with the private equity team and your chairman and your non-executive directors. Firstly, there will be regular board meetings, and it's important that on the run-up to a board meeting that you advise the chairman of the trading performance and that you get the numbers and the board pack out on time so that the other members of the team have a chance to review that before the board meeting. And secondly, it's also important that when things go badly or off plan, that you clearly communicate that to the board early and you're clear about the actions you're going to take to put the team and the business back to the levels of performance that you promised in the plan. That will build confidence with the investment team and the chairman of the business and your ability to control the executive and the business going forward. So in summary, I would say have a realistic plan. Make sure you've got scenarios for downside and upside. Make sure you have a very good team and that team understands the span of control that they have to have in their areas to deliver against the plan. Make sure that you are very good at communicating, not only with your executive, but with the investment team and the chairman and the non-exec. And be clear and confident about your numbers and don't miss them in the first year.